Following episode with Adam McInroy is a general source of information only. It is not intended to provide personalized tax, legal, or investment advice, and is not intended as a solicitation to purchase securities. Enjoy the show. Welcome back, everyone, to Two Nobodies. This is episode 27. I'm really excited to be back. I'm glad that people are listening. If this is your first time, listen, subscribe, and hopefully you like this episode. I've got a really great guest in Adam McInroy. I've known Adam back when we did our undergrad together, and we would talk. You would talk training all the time, what to eat. He's always sharing these crazy workout programs with me. I remember the German volume workout program.
Yeah.
Yes. So I got Adam McInroy to join me. He's an executive financial consultant with one of the largest asset managers in Canada. And so we're going to talk investing. We're going to talk about diet and training and maybe a little jiu-jitsu I think we're going to talk about, but it's going to be fun. Adam, welcome to Two Nobodies, man. I'm so glad to see you. We have not spoken since 2008, and so just really happy to have you on the show.
Yeah, man. Well, thanks for having me. I mean, this is just pretty awesome. I listened to that Stu McGill and I was hooked. Stu McGill got me in, and here I am.
He's an interesting person. He was somebody who, as many people who went to Waterloo, you just can't help but admire. And have him speak in a way that was just not in his normal, like he was out of his comfort zone, it was a really, really neat experience.
Yeah. Tons of respect for him, everything he's done as far as research goes, and just totally, I'm going to call it revolutionizing the whole back industry as far as fitness and back health goes, and totally flipping that industry upside down and saying, hey guys, you got it wrong, and having the guts to say that in today's society.
I'm still surprised that there are a lot of trainers out there who don't incorporate, it might not have to be every single exercise. And he even says this, he gets commented for, if you're in mixed martial arts, well, you're flexing the spine and therefore you're, you're going to hurt your back. He understands that there are certain movements in certain sports where you just can't obviously, keep a certain posture and move a certain way. But I still find it very surprising that many trainers haven't found him, or even if they find him, they don't sort of adhere to him. It's just mind-boggling for me. But again, I'm also a convert, so.
Yeah, you've been converted. Yeah. You've had a few classes with them.
Yeah. What's your training like these days?
Yeah, so, I mean, I have 3 kids at home, so that in and of itself makes it a big challenge.
Yeah.
But, I mean, up until my first kid was born, I was big into powerlifting, so squat, deadlift, bench. My wife and I bought our first home, it was either I get the basement or I get the garage for the gym. Right. And I ended up in the garage, which was fine.
Yeah.
So, I have a pretty solid setup. COVID didn't set me back at all. But I mean, once my son was born, I stopped competing in that. I didn't have the same time and energy to devote to heavy lifting all the time.
Yeah. And
so probably did my body some good. My wife says I've lost a few pounds, and my suits definitely show that.
Hey, that's what matters.
When you wear a suit, right? When you wear a suit every day, you notice those body weight fluctuations for sure. So for the last couple of years, continue to lift heavy, but about 3 years ago, because my youngest is 4, so 3 years ago, got into jiu-jitsu just because I recognized that I am horrible for stretching and warming up. I'm just bad at it. I'm like, why do I want to spend 10 minutes doing that? And I know the science behind it. I should definitely be doing it. I'm not the person you want to be following for that kind of advice. But I'm like, I need to do something, and I'm like, I'm not going to go to yoga. I'm not going to stretch on my own. I've got it. I'm going to take up jiu-jitsu. So I started training Brazilian jiu-jitsu, and man, was it an eye-opener.
It's a workout is what I'm hearing. It can be a serious cardio workout.
Oh, yeah. Legitimately, I started in it, and it was, first of all, very humbling. Very, very humbling. I was probably 275 when I started, and my bench was over 3, so I'm a pretty strong dude. Squat was over 5. I was deadlifting consecutively over 500, no problem. So pretty strong dude going into jiu-jitsu, and like a 150-pound guy just like manhandled me. Like it was ridiculous.
Right.
And I'm like, there's something going on here. So yeah, when you roll, so it's like technique where you're learning and repping technique the same way you do basketball drills, or something along those lines. And then there's randori is what we call it. So it's fighting or rolling. And man, like it is crazy. Not to mention like you're wearing a gi generally or a no gi, but even still like it's fast. It's 6-minute rounds and it's hard to move for 6 minutes with the adrenaline pumping because it's just a whole new world.
When you're when you're rolling, what's the purpose? Like what's the objective? Like what are you trying to achieve?
So in sport jiu-jitsu, there's points. There's a point progression system. So as you gain advantages on your opponent, as you move up in, I'm going to call it strategic position, you gain points, or to submit the person. So you can choke them, you can armbar, like you attack joints and the neck to submit them in different capacities. There's no striking, there's no body blows or anything like that. So I generally don't go to the office with black eyes, which is really helpful. But yeah, it's an awesome sport. Awesome.
You're like, how tall are you again?
6'2", 6'3".
Adam's got some size to him, and no one would probably want to mess with you. Like you probably feel pretty secure in your position these days, I would think.
From a jiu-jitsu standpoint, I certainly have progressed.
Yeah.
But like I'm 3 years in, and 150-pound guy can still destroy me. Like he's a much higher belt rank than I am. Like I'm still a white belt. I'm working my way up.
Yeah.
He's a brown belt, but I mean, there's no competition. Like the days that I have a good position on him, he's like, yeah, I wanted you to put me there so I could work my way out of it. I'm like, okay, now I just feel like a chump.
So is the goal to be a black belt then?
That's the long-term goal, but realistically, like it's about the journey. And that's one of the big things. Like, for a while I was like, when am I going to get my blue belt? When am I going to get my blue belt? And now I'm like, it doesn't really matter. Like as long as I go into the gym every day, focused on learning, even just like a minute detail, I know it's going to carry exponentially in the future. And so it's, the belt is a visual reward, but like when I go on to the mat more confidently, when I feel like I've learned a new position, that's just a self-mastery skill, which I really have in the last 12 months really started to appreciate that, a belt means something, but it really doesn't, right? Because just because you're a black belt, and I'm not saying this lightly, like just because you're a black belt doesn't mean you've earned that, right? And so I want to make sure I've earned that, but I also, have the skill to back that up.
Did you do any martial arts before?
No, not at all.
No.
So like I was powerlifting, lifting heavy, and I'd be playing pickup hockey and stuff like that. But I never had the opportunity to do a martial art, never boxed or anything like that. And it was just, I knew I needed to change a fitness component, put in some cardio, but the primary thing was to start stretching. And when you're being forced and contorted into different positions that maybe aren't the best for the spine, you certainly do stretch. And so it was a natural benefit.
When COVID hit, did it all kind of just shut down?
Yeah, it was been really interesting. Like, it definitely shut down at first. And then when our first phase of reopening happened, you could go in and roll. You could go in and train without a mask, but you couldn't train with a live human. You got to bring in your dummy. So like people would bring in stuffed animals and stuff.
Yeah.
It's not the same to roll with like a big sheep or anything like that. It's just not quite the same. And then things lifted up and we could roll. We had groups that we could roll with, and then we got shut down again. And then since I think it's August this year, things have been, you can train normally, which is great. And next weekend is my first competition. We're going down to Ottawa to compete.
Ooh.
So that's good that there's competitions happening again.
And is that based on weight class?
Yeah, so it's based on belt, weight class, and age. So,
Okay, so you're
because I'm a master's, like, because I'm over 30, so I fall into a master's
oh,
category.
good.
Masters. It sounds really great, though.
And so they'll match you up. So age, will they match? Then what's the next thing? Does it go belt or does it go weight or?
Yeah. Yeah, so all three factors are carried in. So I would be going against another white belt
Okay.
who's 220 pounds or heavier
Okay.
and between 30 and 39.
Okay, because I was going to say if you went with a higher belt, you might probably not be a good idea.
Oh, yeah. I wouldn't be meeting podium. That's for sure.
Yeah.
I'd survive, but I wouldn't meet the podium.
I'll have to follow up with you on how
Yeah.
that goes. This is your first competition?
Yeah, first competition. So pretty stoked for it. Have a few good coaches coming down with me, so it'll be good.
I did Taekwondo. This was a long time ago. This was like between the ages of maybe 10 to 15, and I finished my black belt. And I remember going to Taekwondo competitions, and so when I turned 14, Adam, I was 4 feet 8 inches. Like I was really, really small. Yeah. Like when I went into grade 11, I grew, I think 6 inches over a summer or something like that. It was,
whoa, it's a big spurt.
Yeah, it was a big spurt. I mean, I'm only 5 feet 8, but I'm not that tall. But at that age, I was going up against, kids who were, 5'3", 5'4", and it was intimidating, man. It was tough, some of those like Ontario-wide competitions that I would go to. But anyways, I hope you have fun. I remember them to be fun. I don't know what it would be like to do it as an adult. I feel like it would be more intense than when you were a kid because there's like that fun element. And I don't know, maybe as an adult there's a fun element too. I don't know.
Yeah, I don't know. It's one of those things where when you are literally like, not all out fighting, but you're fighting for competition. I mean, I'm sure there's the bad apples in the group, and it just adds a whole nother level of complexity when you're an adult versus a child.
Yeah.
So we'll see what happens.
Yeah.
I'm sure it'll be a good group of people, and I mean, I got some good coaches coming down with me, so it'll be a lot of fun regardless.
Well, I'm happy to hear that, the jiu-jitsu's kind of come back online. Like this pandemic I feel like it's kind of gone both ways. You've seen people just, obviously gyms have been closed, so they can't work out. Or even if they could work out at home, they're just not able to, or not working out and not staying fit and healthy. And then I've seen the other side of things where people are just really like focused and honed in and change their lifestyles and see dramatic improvements. And you see these stories, and you see these two kind of extremes. But it's been a weird time, hey.
It's been so challenging, and like staying on the fitness topic, I really feel for the people who just can't afford to go to the gym or do the pickup
100%.
ball and stuff like that.
Yeah.
Like literally in the summer, because you weren't allowed gatherings of over 5 people outside, we have downtown basketball courts here in Peterborough. And literally, like, neighbors were calling and saying, hey, they're playing a pickup game of basketball, and the police had to come and shut it down. And I'm like, those are, like, it's kids playing. Like, they need that. That is their outlet. And we've just taken that away, and like, in the name of what? Like, I get we're COVID and all that stuff, but, like, we need to have some sense here. And, like, is that really the biggest risk? Or is there a bigger risk that they're not building a community, that they're not socializing? And what are the downsides to that?
Well, we're already seeing. I mean, I can't speak for what's going on in the States, but it just feels like in Canada, like you don't see much like ball hockey happening on the streets anymore. Yeah. At least like I grew up in Toronto, and that really stopped for like after the age of 14, 15. I really didn't see much. And so like to think that kids are wanting to congregate and play some basketball or play some hockey, and then, for right or wrong, they're being restricted to do so. That's tough. That is tough.
Yeah. I mean, it's just, I think what we've seen is a bigger divide between the have and have nots. And I don't just mean like financially, in so many different ways, the people with family, the people without family, like there's just been so many factors socially, relationship wise, fitness wise, employment wise, between different people.
Yeah. You're
just seeing a massive divide on so many different levels.
Yeah, for sure. I want to take you back to March 2020 as an executive financial consultant. What was that month like? And I think you know what I mean.
Yeah, oh yeah. So for those of you who maybe aren't as familiar with the financial markets, basically March of 2020 was, for lack of a better word, the recent doomsday, right? Like we literally saw the equity markets go beyond a bear market. So for the average listener out there, a bear market is defined by the market index dropping by 20% or more. So we passed correction territory. We're in a bear market. And, it was my first bear market. It's the first time I've been through a bear market as an executive financial consultant. I've certainly read about them. I've been through corrections before. I've been through other world events before. I've been through Brexit. I've been through the Trump election, a number of other ones in there. But this is the first one where things felt different. Like from a business operations standpoint, it was the first time where we were saying, no, we can't meet you in person. And when you're telling that to people who's have been working with you for decades, 20, 30 years, and all of a sudden they're like, okay, but we still need to talk about our money. Yeah, no problem. We'll just do it over Zoom. And for some people, that's no big deal. For other people, it's like, this is a whole new world.
Sure.
And money, can bring out the best in people. It can also bring out the worst in people. And at a time where we're already with so much uncertainty, people tried to make something certain, and they didn't know how to do that. They didn't know if they'd see their children in the next couple of months, if this was truly the end of the world, what was going to happen. And so, we did a lot of proactive work by calling our clients, and it was all through the month of March, and it was talking to them about, yes, this is what's happening. I don't know how it's going to end, but I do have faith that it will end and things will turn out all right. I cannot tell you today how that's going to be, but know that we're going to be here through it with you. And I'm going to say for the vast majority of our clients, they weren't as concerned as you might think they were.
Interesting.
It was more of a thank you for the phone call. Thank you for being proactive. Thank you for taking the time out of your schedule, because I'm sure there's a million people trying to call you. And there wasn't. We were very active in reaching out to our client base. The nice thing was we knew, at the middle of March, statements were going to come out in the next 2 weeks and they're going to be down. And it was cool to be calling clients proactively saying, you're going to get your statement in the next, how bad is it going to be? This is what it is. Really? That's it? Yep, that's where it's at. Oh, okay. And because we had such a fast rebound, I think it was March 24th was the actual bottom.
I remember the exact date. Yep, March 24th. Yep.
Yeah. So by the time some of those phone calls happened middle of March, start of April, and when you call them for those ones who called in the start of April, it was, okay, so where are we at now? Well, this is where the market was. This is what your quarterly statement says. This is where you are now. Oh, I'm already up? Yeah, you're already starting to recover. Oh, okay. And it's like, it wasn't the catastrophe that some people thought it was. At least from where I sat with our clients that we were working with, it was, thank you for proactively calling me. Thank you for taking the time out of your schedule to make this phone call. I certainly wasn't looking to jump out a fourth-story window or anything like that. It was certainly emotionally stressful, but it wasn't, in my mind, the end of the world by any means.
That's really good to hear that, the reassurance, prevented people from wanting to pull out their investments or take some really draconian actions. So that's really good to hear. What was the point at which you, as just thinking from an investment perspective, were you feeling like, okay, I think this feels okay now? Because the S&P dropped at 45% or
it was down.
It was definitely down. It was significant, and it was the first time obviously in our lifetime that just the economy
Yep.
literally shut down, businesses had to shut
Yep.
down, and there was that much uncertainty. So at what point, what was the trigger for you to be like, okay, I think this is now safe? Like, was it, I know from the U.S. equity market, like the Federal Reserve certainly backed a lot of major companies, and they
Yeah.
got involved, and that's a thing in itself.
Yeah.
I've heard that people feel like, okay, once the Fed jumped in and central banks jumped in, it was like they felt reassured. But what was the thing for you that you were like, okay, from purely investment standpoint, what was the
It's interesting, and I don't want to get too much into it, but with the Federal Reserve jumping in, was it needed? Probably. It certainly, at least from an emotional psyche standpoint, gave confidence in a capitalist society. But, it was one of those things where, and maybe it's just who I am, but it was before the end of March where I said, okay, we're going to be shut down. We're not going to be seeing clients. We need to pivot and figure out how to adapt. Because when you're dealing with people's money, working with people in long-term relationships, dealing with financial planning, it's a relationship business, and it's also a trust business. And there's not much more people divulge to you, unless you're their priest, unless you're talking about money. And so for me, it was very much, it is what it is. I can't change what the governments are putting in place, whether I agree with them or not. Like, I cannot change that. But what can I do to continue to support the practice that I'm working to build, the clients that I'm serving? How can I pivot to be the best position I can be to be there for them? And, by the start of April, I was already like, this is what we're doing. I was moving. And it suddenly clicked. Like, I think for a lot of people, it was, I don't know if I'm going to have a job. I don't know what's going to happen to my health. The markets are crashing. This might be the end of the world. And they were seeking something that they could control. And so the draconian measure that you talked about, I think, was very real. And we have stats to show how drastic that draconian measure was of people pulling out of the market in March of 2020. And it was insane. The outflows from the market were immense.
From the kind of clientele that you would typically see?
No.
Okay.
Not from my clientele. Definitely not from my clientele. I would say, less than 1% of the clients that we choose to work with would have been in that boat. Very small. But where was I going with that? One thing that I saw very rapidly was companies shifting overnight to, we can still keep operations working. We're working from home. And yes, there were certain sectors that have been, and continue to be devastated.
For sure.
But there was a lot of companies overnight that said, we need to keep the lights on. And that's what you would expect in a capitalist society. No matter what the challenge is thrown at, there's going to be someone or a company that improvises, innovates, and changes the way business is operated. And so you saw Zoom overnight. Almost every operation company had Zoom overnight like that. DocuSign, like legal documents that had to be signed in wet signature. All of a sudden overnight, we had full access to DocuSign. And like all these technology changes that were coming in our business, suddenly they're there. And, it's like business is going to keep going. And people think that this is going to be the end of the world, but it's really not. Like, our economy is built on an entrepreneurial system. And it's that desire we got to keep businesses operating.
Right.
We got to keep our businesses flowing. And so like literally by the probably first week in April, I was like, I still don't know that this is the end as far as the market drops go, but I know that we're going to be okay. And again, it's that I'm not confident. I don't know the outcome, like how it's going to be okay, but I see things that were like sprouts of grass coming up from the ground. And I'm like, there's a hope here, and here's another hope. And you just start stringing those together and you're like, this is going to turn out way better. And it's going to create a lot of changes. But like, I would say within the first or second week of April, again, I didn't know that the bottom had been hit for sure.
Yep.
But I knew that I knew with 100% confidence everything was going to work out. I didn't know how, but I knew it was because I just saw the adaptation of so many different sectors of our economy pivoting, realigning, shifting to work from home models, like so much changing that I'm like, there's going to be so much more profit because now people are staying at home. They're not spending the same way. So yeah.
And I mean, at the end of the day, if you're a long-term investor, you're not going to worry about a single peak or a W or,
Yeah.
I mean, the biggest concern was, whether you just saw just sort of long-term stagnation. But generally, if you're a long-term investor, like that shouldn't faze you. But it definitely, when you see in that short amount of time, things swinging that negatively, like it was a very, very scary time. And it's good to, I don't know if you've thought about this much, but like we see, it seems like there is a lot of cynicism these days, right? There's a lot of mistrust. We see issues of people, we can't even agree on basic facts, right? And to think that, someone would continue to trust you, after a big negative slide like that, that's probably, kudos to you and the people that you work with to maintain that trust. But I think about how many people, maybe not as a result of this, as a result of that downturn, but just over the years have turned away from people like you to manage their money, to directing on them, doing self-directed investing. Like I'm a self-directed investor. Yeah. I just trust myself, but I mean, I also read and learn about these things, and I'm not someone who, but it's easy though. It's so easy to just put your money into like an index fund or these kind of baked in portfolio ETFs and kind of do things, right? So like, I just wonder how many people are swinging towards self-directed investing, and is that a concern for like your profession, do you think?
Yeah, it's a great question, and it's certainly, I'm going to call it an industry shifter. It's certainly created change within the industry. I think, it's really important to bring up the fact that unfortunately right now in Canada, our industry doesn't regulate titles, right? So like anyone can call themselves a financial advisor, a financial planner, anyone can call themselves a wealth manager, or any other titles that you can create. And I think it does a really big disservice to someone like myself who holds their CFP designation. And I always create the comparison, someone who calls themselves a wealth specialist or a wealth manager or something like that, without any designations behind their names, essentially has a license to sell a fund, an ETF, or a securities of some capacity. Someone with a CFP behind their name looks beyond just an investment portfolio. And so I equate it to, excuse me, I'm going to drink.
Yeah.
I equate it to a pharmaceutical rep has a license to sell a drug. A doctor looks at the holistic body and maybe part of it is a prescription for a drug, but part of it might also be you need to exercise, you need to stop smoking, and there's so many other factors that generate overall health. As a CFP, I don't just work with clients on an investment portfolio basis. We build out their holistic financial plan. And what I mean by that is we're looking at debt strategies, debt management, cash flow planning, tax planning, income longevity, risk mitigation, estate planning, and all those components synchronously, so that it's not just a portfolio.
Right.
And so when we see those drops in the markets and the client calls in and we have a conversation or we call them proactively, it's not a how much am I down, but how does this truly impact my retirement longevity? And we can confidently say, yeah, it's not going to matter at all because we've run the scenario already for you with what you've dropped and you're still in great shape, right? Having that conversation puts a very different perspective on it than what drop have I had? Okay, what does that mean? Well, I don't know. Right?
That's that framing would be very beneficial especially for
Yeah.
those clients who can't necessarily process that bigger picture, right? For you to frame it as like, okay, this is not just don't just look at the immediate number in your investment, but to look at how this impacts your entire financial plan. That's a very different frame than saying like, yep, you're down in this particular portion of your investments, or just focusing on those numbers. That would be interpreted very differently, I would think.
Yeah. It goes back to, it doesn't matter what your net worth is. What matters is what you plan to do with that money, right? And so, if you're getting 8% and I'm getting 6%, and I run out of money at 76 and you run out of money at 78, but we both lived to 85, it doesn't really matter what our rates of return were. We both failed to meet our goal, right? And so there's a lot more to a true financial plan than a portfolio. And to go back to your question, do I find it hard in our industry because of the change? Yes and no. I think there's some people who will do it on their own and miss out on other opportunities because they only build a portfolio and that's all they know. And there's other components. Going back to COVID, the Financial Planning Association of Canada did a lot of studying about the impacts that COVID had around wealth and distribution. And just to give you a few ideas, working with a CFP, so a certified financial planner professional, with a planner, despite COVID, 19% were still able to prioritize retirement savings versus those people without a planner, only 9% were. Same demographic. Have they been able to increase money going to savings and or investments with a planner? Over 17% were, only 12% without a planner.
Interesting.
Seen an increase in credit card debts. Only 8% working with a CFP noticed an increase in their credit card debts. Without a planner, 17%.
Wow, that's huge, especially with the interest rates on credit cards, right? So yeah.
Right.
Yeah.
The biggest one, though, I had to borrow money from loved ones to survive. With a planner, 3%. Without a planner, 11%. Wow. And like, it just, an investment portfolio is a huge part to a financial plan, don't get me wrong, but it's certainly not the entire thing, the entire plan. And that's where someone like myself, I think, really differentiates themselves from the pharmaceutical rep, where here's a mutual fund, here's an ETF portfolio.
Yeah.
Let's see what happens.
Yeah, no, that's, I think that's good. That's really good context. I think there's some things in there for sure that I just learned. I'm curious about then when you have to manage the wealth of other clients and their financial plan, what are the most common mistakes that you typically run into? Like, what are the things that you just frustrate the shit out of you, or you just see them kind of commonly go back to the same thing? Like, what do those things look like?
Yeah. So fortunately, excuse me.
I love your, I do remember, Adam, I'm pretty sure that when you were in school, didn't you carry like this massive water bottle? Was that you?
I totally did.
Yeah, okay. Because your mug was massive. I could just see it. Yeah,
it's legit. Like, it's 1.5 liters. It's supposed to be a beer mug.
Yeah.
But I don't drink beer, so water it is.
Yeah.
But it's great because I can fill it up to here with ice and still have like 1 liter of water. It's fantastic.
I love it.
It's so good.
Yeah.
So, so to answer your question about the common mistakes I see, I'll answer it from what I see through my lens working with clients, and then I'll answer it from the conversations I've had with do-it-yourself investors.
Yeah.
So for the clients that I work with, the few biggest mistakes that I see, failing to understand that inflation is real. This year is the exception to people actually cluing in that there's inflation. But, retirement has changed in the last 50, 70, 100 years. It used to be you'd work all your life in something physical. 65 would hit if you made it that far. And generally by 67, 68, you're dead. So retirement was 3 years. We've come a lot with healthcare, with pension plans, etc. So, there are certainly clients that I have that are 55, 60, and retired.
Right.
Average lifespan for a married couple, one of them on average is going to make at least 87. So now, let's just say 60 was retirement, 27 years. That's a long time to go compared to what it used to be. And if you don't appreciate inflation, even when it's not where it is today, even if it's just at 2%, that's a very significant increase in cost of living year over year over year. And a lot of people fail to realize that, yes, you're retired and you want to keep your money safe, but safe to me, when I'm building retirement income streams for 20, 30, 40 years even, isn't under a mattress. Safe to me is I want to keep you in the same lifestyle with dignity and comfort that you've been used to. And that means keeping it safe from inflation, keeping up with the cost of living so that when you hit 87 and you still have good health, you're not at the point of eating cat food.
Right.
And so I think, understanding what that looks like from an investment portfolio standpoint for a lot of older people is challenging. And the other one, which I think is the same, whether it's a do-it-yourself or with the clients, is behavior. We are not wired as humans for proper investing.
Sure.
We like the shiny thing. We like to read the newspaper. We like to get the updates. And we tend to be our own worst enemies. Our emotions are such, and our brains are wired for reactions. And those reactions, unchecked, often result in the exact opposite reaction than what you would want to be doing. And so, sometimes it's just coaching them through the downturn of 2020 and saying, I don't know how it's going to end other than it will end and things will come back. And do not do something draconian, to put it in your words, because the cost of that is going to be exponentially greater than just continuing with the plan.
Do you think that's why sort of a plain vanilla index fund or ETF just makes a lot of sense for people?
It can when it goes up. Everyone, right? Everyone has this euphoria sense when they see their money go up. But when it goes up, our mind is wired so that we expect any investment to always go up. And so when the money goes up, when the account balance goes up, you don't have the same emotional response as if it drops. When it drops, the emotional response is twice what it is when it goes up. And, you walk into a casino, and if you start by winning, you're feeling great and you're going to keep going until it falls down. And then you're like, well, I got to win my money back. So I keep going. And Vanguard actually did a really good study. So I'm sure you're familiar with who Vanguard is. For those of us who aren't familiar with it, it's one of the largest ETF providers. And in the States, there's even zero cost ETFs that they've provided. But they have found through their own research, and this is an ETF company, that the advice and value that an advisor can provide is over 300 basis points. So over 3% of the value and advice that an advisor is providing. And it has nothing to do with investment selection. It has a lot to do with cash flow management, and more importantly, behavior management, and knowing how to connect with clients and talk them off those ledges.
Interesting.
Because we as humans are not designed for that. We're just not. I feel great when I get a scratch off lottery ticket and I win, and then I go back and I buy another one, and it just keeps going.
No, so. I mean, that makes a lot of sense. I'm also thinking about these sort of baked in portfolios where you have you can just get a balanced ETF portfolio. Vanguard has them. All the major investment companies have them. Financial companies have them. And, you don't have to do anything. You just put money in there. Don't have to worry about rebalancing. It's done automatically for you. Do you see any risks to that? Like, you think there's still a behavior component to that?
100%.
Yeah.
Yeah. And it's just like, I think a lot of people are addicted to their phones, without a doubt. And I think we've put the ability to trade and create this sense of urgency that I always need to be checking what the markets are doing and be making my changes. So if you're truly a leave it and forget it investor, it can make sense. But I think the vast majority of us are very much I should do this, or I've read this and I need to make a change, without thinking through all the other repercussions, right? And time after time, like 2020, March was a great time to be going into the market. Just was. Like, everything's on sale. If you go to the store and, buckwheat's on sale because you're making buckwheat pancakes that week, you're stocking up. Like, I know you, right? You're like,
I'm
Michelle,
the buckwheat king, man. I'm the buckwheat king.
That's right. Like, I get your game. It's good, right? Like, but you're stocking up on buckwheat because buckwheat, I'm sure, is not a cheap commodity. And so, but the exact opposite happened. And, I know that clients that I work with, they weren't part of that mass exodus out of the market, but the flows out of the market in March last year were very drastic. And April, May, June, the inflows were good, but they certainly didn't make up for the outflows that came in March. So you would think in a time when the market's dropping, behavior would be, it's on sale, let's put into it. But that's not what the market saw. And so, even with a self-directed portfolio, there's still opportunities that are being missed there.
So were you, for your clients, then at that point generally suggesting, hey, if you have the cash, let's invest now, kind of thing? Like, is that generally the advice? I mean, understanding that you're looking at the broad, big financial plan, but I'm just saying, it's just generally, broadly speaking. Yeah.
So generally speaking, if the clients were in an accumulation phase, absolutely. Like, volatility for an accumulator is like manna falling from heaven. It's gold. For the retiree, it was, okay, let's figure out what we're going to do. And we have your portfolio well constructed to handle this. And this is where you're at. And it's, oh, okay. But that's a very different conversation than if you're a do-it-yourself investor, you're hearing the doomsday scenarios, and you're in retirement, and you're like, oh, this could be the end. And you've never been through it. You've never managed your own portfolio through that. And now all of a sudden, the world's ending. I need to pull it out.
Well, I'm not going to lie about this. I was listening to CNBC and BNN every single day, multiple times a day during that time. I would say probably that's because I didn't necessarily have somebody who was well versed in this stuff. But I think even if, like, for example, if you were my financial consultant, I would still, because you just don't know either, right? Like, you admitted it, right? Like, you just don't know. Yeah. So I'd be like, okay, well, why should I trust? Like, how is he going to change my behavior? Like, what are you doing to mitigate the behaviors of that you would see in a self-directed investor? Like, in that moment, is it just purely the trust and, history with those clients, or?
But it's also, like you said, bringing it back to the plan and reshaping that conversation, right? Like, when I know what the plan and the income longevity is, and I know what we've projected as far as volatility goes in the portfolio, and we're still within our target ranges, and I have that conversation to say, hey, Rupesh, your portfolio is down. This is what it's down by. But don't worry, I've already run the projections. We're still in great shape regardless of what continues to happen. That's a very different conversation, and it invokes a trust and a calmness to let you think rationally, to get me a second breath to say, this is what I'm seeing happen. I don't know how we're going to come out of this, but I know we're going to come out of this stronger than before. You're already down, but the worst thing you can possibly do at this moment is pull out, because you've capitalized and you've realized those losses. Our plan has already taken this into account, and we're still on track to achieve your goals, right?
Yeah, no, that's that makes sense. It's hard for me, anyways, to imagine those still like to put a lot of faith in that. But I think that would definitely help for sure. When we think about, I'm just thinking about index investing now, though, just like in these, you just invest in like a index fund that follows the S&P or whatever it is. I'm hearing, and I'm really curious about your thoughts about, do you think that there is a bubble? Like, do you think that I know that there's one theory out there, like I think I heard as much as like 45% of like the US stock market is mostly now passive index investors, and people are concerned about that. Do you have any thoughts on that? I'm just kind of curious.
Yeah. I mean, I'm not going to speculate on if there's a bubble or not, but that being said, I did look at the composition, and I'll just talk about the S&P because that's the one I looked at. And I think 2 years ago, there was 5 companies making up over 50% of that index, which, if you're looking for diversification and there's 250 companies making up an index and 5 are owning over 50% of it, do you truly have a diversified portfolio there? I'll let every listener be their own judge for that, but just food for thought. Do I think there's a bubble? I don't know. I don't have a magic 8 ball that works. Everyone's always projecting a bubble, a bear, or a bull. I mean, that's just the way our world works. And I think there's a lot of newspapers, blogs, videos, etc., predicting what's going to happen. I have a weather app on my phone. I don't know about your phone and your weather apps out in Alberta, but I know mine is inaccurate most of the time. And if it's going to rain on my app, I'm like, okay, let's go to the beach because I know that it's going to be wrong, right? And I mean, there's a lot of satellites. There's no emotional behavior in tracking of weather, and they're still wrong. There's so much emotion and unpredictability as far as the market goes. I don't really trust any prediction.
Yeah, no, that's fair. I think what I'm just seeing are two things. Just you see a ton of advice from some pretty well-known investors, people that are household names, right? Who are saying the best way to invest is just to put all your money in a fund that tracks the S&P. And so you're seeing a ton of people just blindly put in money into index investing. And then the other piece is that maybe it's more of a personal concern, is people are, I suspect, are starting to become a little bit more conscious of, obviously people are becoming conscious consumers in what you buy in at stores, but I think people are also starting to become more conscious investors, right? And if you're a conscious investor, an index fund, I don't know if is right for you, right? Like you said, and we don't have to talk about the specific companies, but the S&P, like you said, 5 companies make up 50% of the fund. Well, these companies are kind of in a little bit of hot water these days, right? Just from we're talking about big tech companies. And so I just wonder if people will understand that, their money is going to these big companies that they also are probably not big fans of as well, right? Anyways, I just wonder if people are kind of putting all this stuff together. So I worry a little bit about just blindly putting money into, and it makes sense. I get it. Like, just invest in the total market and you're generally safe and largely diversified, unless you're, like you said, just the S&P, but there's got to be more to it.
Yeah, and I think you hit the nail on the head with, hopefully they're wise in doing their due diligence, but if you're young and you've never been through a 2020 before, or you've never seen the long-term trajectory of the market, it causes a pause to say, do you actually know what you're doing, or are you just putting your money in there? When it drops 10, 20%, you'll be like, oh my goodness, I didn't know what I was doing.
Yeah.
Because that's the other side of that equation, right? If you invested in April of last year and you've just continued on until August of this year, your returns look incredible. And of course you'd be riding high because you did it on your own and really there was no skill involved. It was just the way the market worked out. But if we go through a period with stagnant growth, you're going to be more apt to like, why am I not getting my 20, 30, 40% rate of return? And that's where behavioral issues start to creep in, and, you know, the expectations are not matched. And if you go through September and you started last April 2020, and you looked at your portfolio at the end of September this year, you know, it might have been a rude awakening for a lot of people to say, oh my goodness, I'm down. I've never been down before. I must have been doing something wrong, or this is not what I signed up for.
To me, that's a really interesting point, Adam, when you talk about expectations. And are you concerned that, especially maybe some of the young investors who haven't been through corrections in the past, or who haven't been through, you know, like you said, 20, 30, 40, 50, sometimes in some cases with some equities, 100, 200% growth in the short amount of time, do you think like their expectations are so skewed that they're just going to have a hard time once things just kind of go back to, you know, maybe, I don't know, who knows what it's going to be like, but let's just say it goes back to 6 to 10%. Amazing. That's amazing if you get that kind of rate of return, right? Like generally, if you got 10% on your portfolio, that's amazing. I think expectations are skewed.
I would agree.
Yeah.
You know, I think we've gone through this upward trajectory, partially because of what the Feds have done and just injecting cash.
Yeah.
And so people had time. But it's also interesting, I think, with, you know, I don't know if you watch Netflix, but there's a Money Explained docuseries on it. And it was interesting to watch that one. And it was talking about gambling and money and stuff along those lines. And basically, the number one downloaded app in April of last year in these states. Exactly. Yeah. So, and the reason it was downloaded the most was not because people wanted to get into the financial markets for investment purposes. It was casinos were shut down. So we got to gamble. 100%. Right? I'm sitting at home. I can't go to my casino. Well, let's just get involved in the stock market. And like, you sign up on Robinhood or any of the other apps, and they're giving you free stocks. It's not for investment purposes. It's to get you playing. And so, you know, that's the biggest fear that I have is people are gambling instead of investing, and not understanding the difference between those. And you, as well as I know, you know, if you win the lottery, that's wonderful. Like literally, if you gamble and you win the lottery, that's amazing. But odds are, statistically speaking, within 5 to 10 years, that money's gone. Right? And so it's not just the behavior on the market that matters. It's also how we manage money. And that's a very different conversation than anyone right now in the industry is having with this do-it-yourself approach. If you have mountains of debt, if you continuously overspend, if you do not live within your means, it matters not how much you're going to earn in the market or how much you're going to save because of low-cost investments. What's going to end up happening is you're just going to continue to spend, and you're still not going to have two pennies to rub together. Not that we make pennies anymore, but you know what I mean.
Yeah. Yeah, for those who are not Canadian, we don't have pennies in this country anymore. My daughter found a couple of pennies. I was like, yeah, go ahead, have them. Have a ton of them.
Yeah, exactly.
She was so happy.
Get some rolls and turn them in at the bank.
Yeah. You're seeing some crazy stuff. I don't even know what this stuff is anymore. I feel like it should, but like meme stocks, and I mean, obviously I know about Reddit and Wall Street bets and all that kind of stuff. And for those, I don't know. I think unless you're not investing at all, most people have probably heard that people are investing based on a Reddit forum called Wall Street Bets and investing in stocks that, you know, I don't know if they make any sense anymore, but they're just being pumped up, and then NFTs, right? These non-fungible tokens, and I don't get. I don't even understand. Do you understand what meme stocks are? What are these things?
Yeah, so like you said, it's the Reddit forum, and it's just so Wall Street essentially was betting on a decrease in value in certain stocks, and so they were shorting them, basically in a position where they wanted the value to drop so that they could buy them super cheap, buy them back, and it's a whole leveraging strategy. anyways, and so this group on Reddit looked and could see the transactions happening and said, if we got enough crowdsourcing together, we can more or less make Wall Street suck it. And so they pumped up the price of these stocks, and as a result, the Wall Street hedge funds had to come up with more money to meet their market margin demands, with the hope that they would continue to lose money and they'd be able to put these hedge funds under. Of course, that didn't happen, but that's where it started, and then we continue to see different meme stocks where it's just, let's pick a stock and we can literally crowdsource the fund value or the stock value up, and then pull out, and who's ever left handing it gets a losing day.
Do we know with Wall Street Bets whether it was mainly just like the average retail investor, or were there some heavy hitters in there? Do we know?
I don't know.
Yeah.
I don't know, and I'm not even going to speculate on that.
Yeah.
But regardless of how it played out, it was from someone not involved in it, it was a pretty cool social experiment to see if you could legitimately manipulate the market, because that's what was happening. Like, it was a legitimate manipulation of the market. And I'm not a securities regulator in the States nor in Canada. But yeah, it's very showing of what can happen in a market based on nothing other than emotions and behaviors. Not
to say that doesn't happen with large hedge funds, right? It's not like they're
for sure.
They're not innocent in that equation as well, right? Like, we see that too. Right. So it is actually kind of amazing if it was largely just like retail investors that they were able to crowdsource and move the market the way they did and take on large hedge funds. I think that's pretty badass. Like, I think that's pretty.
It's kind of rebel, that's for sure.
Yeah.
And I mean, I don't know like you do if it's just retail guys, but I do know Robinhood shut down for a day during it.
I remember that.
And a few other online platforms. So you kind of got to think, like, if it wasn't retail investors, at least Robinhood said there's a lot of risk here and people don't understand what's truly going on, and it's market manipulation. And we can argue right or wrong, was that the right decision?
He got
that's what happened.
Robinhood's founder, I know, got a lot of flack for that. I remember. Yeah. It's an interesting time. And do you track any disruptors? I mean, we talked about the self-directed investing, but just from any sort of disruptors that you're just following from a personal standpoint or interested in tracking when it comes to investments?
Not overly.
No.
No, I mean, I read so much, and it's like, everyone has their own different view on things. And I think even as someone that, like, this is what I do, it's amazing how much we disagree to agree, right? Like, literally there's an article one day from one author saying today the market's dropping because of inflation, and the next day the article comes out, investors have come to their sense and the market's doing well despite inflation or because of inflation. And it's just like, someone's written that, you've just put your name to it, and you had to have an article to provide a commentary to the market which is changing, and you're assuming it's because of this and this. And it's really amazing how much content is out there. And I think from where I sit, when I work with clients, when I talk to young people, they read it all, they still need to have it simplified to them.
Yeah.
And what it means to them.
Yeah. We're getting to about an hour here. I feel like I can keep talking and investing. I'm curious. We might have to have you back, Adam, because I think people benefit from just hearing your thoughts on. We probably should talk more about the broader financial planning and not just focus on investing. But investing, it's a sexy topic. I like talking about it. It's fun.
And that's exactly it, right? Like, that's why it gets what it gets.
Yeah.
Because it's exactly what you said. It's sexy. It's exciting. Don't get me wrong. Like, it's awesome when you look at a portfolio and it's up significant. But But I just know that there's a flip side to that equation, and when they go down, people get upset.
Yeah, for sure.
Right? And it's like, it's not that we did anything differently. That's what happens in the market. Well, why doesn't it always go up? Just because the market isn't performing how you want it to perform doesn't mean it's not performing as it should.
I like that. Let's wrap on that line. I really like that.
Okay.
If your personal sort of favorite investment resources, what do those look like? Like, any particular books or any people that you love to follow, or for the people listening?
Yeah. So I mean, I'm gonna pull out an oldie but a goodie, but Jeremy Siegel's Stocks for the Long Run.
Okay.
He's a Wharton professor, so not just an average meme person or blogger or
right.
whatever we call them these days. Social influencer, I guess. Very well researched, very technical book. I'll tell you the highlights. Invest in the market. I mean, his research is pretty impressive. I mean, going back all the way to 1802, I believe it was, he tracked the different asset classes and how they've tracked in inflationary periods and net of inflation and tracking real returns. And it's an awesome history lesson and identifying, despite whatever craziness has happened since 1802, and just how resilient the market is. And it's just, you read that and you're just grounded, and, I don't need to get caught up on what's happening today. I don't need to read and make adjustments to my portfolio today. It really has nothing to do with the day-to-day events that are going to result in your long-term returns.
That sounds like definitely a worthwhile read for sure. Yeah. Well, I usually wrap up these things with a couple of questions, if you're okay with that.
Yeah, let's do it.
So the first one's 5 for dinner. So, dead or alive, who are the 5 people that you'd want to have dinner with?
Yeah, it was funny. I got the questions a few days ago, and we were sitting down for dinner as a family. So I started asking my family members who they wanted there. My children stole 2 of mine, and then my son added in 3 of his friends. So that was quite the conversation.
Okay.
So anyways, 5 for me. So my grandpa on my mother's side, I would have him for dinner. I knew him, but I was probably maybe grade 1 when he passed away, but had a really, really good relationship with my grandma, his wife, all the way through university, after university, just a really pivotal person in my life. So my grandpa, because I never had the opportunity to meet him and just understand who he was.
Yeah.
So my grandpa for sure. I'm going to invite Jesus. I'm going to steal from Stu McGill, inviting Jesus, but I'm going to bring Judas with him.
Okay.
Just because I'd love to see that conversation. I'd love to just be a part of that and understand just all that. Just be a part of that conversation. So I'm bringing him. So that's 3. I should have written them down because I had 5 that night. Probably bring my grandma.
Yeah. This is your maternal grandma?
Yeah. So I'm bringing my grandpa and his wife,
okay.
My grandma.
Yeah.
Yeah. And I would probably bring, I know who it was, Jack Layton. I was going to bring Jack Layton. Totally curveball. But, not because I'm an NDP voter or anything like that, but I just really feel like he was the last leader of Canada that we've had at a federal level that had a vision for the country and wasn't solely out for popularity or his own purpose. I truly feel like his vision, he had a vision. And that's something that very different than I hear from any politician these days. So those are my 5.
Everyone who kind of comes out has been on the podcast. It's always really interesting to hear their 5, and that's those are really beautiful people. And for those who are not Canadian, Jack Layton was a leader of one of our political parties. the New Democratic Party of Canada, and he passed away in 2011. And that campaign that he ran that time around was there was a movement, and it was magical, and he was definitely I can't imagine that many Canadians wouldn't agree with this, but he was very earnest and genuine and authentic and really spoke to the people. And I remember, he's from Toronto, and his funeral, the procession that followed him was something I had never seen before, at least in Canada. Like, you usually see that with U.S. presidents or something like that, or big celebrities. So that's a fantastic Canadian leader to acknowledge, for sure. Besides the circle of life, what do you know for sure, Adam?
What do I know for sure? So I know for certain that there's a God or a higher power, and I just choose to call that higher power God. I just know that for certain. I know that regardless of what challenges the economy or we as a society have, staying invested for the long term will work out. I know that a lot of stress gets handled in the gym, for me personally.
as much I can't knock the first thing you said, of course, but I love the last thing that you said, of course. So
right?
Yeah, I get that one.
Yeah, loud music and a lot of iron solves a lot of problems.
Man, my daughter always comes she watches me in the gym, and she'll just sit there. And in the beginning, it was like because she's only 3.5, she turned 4 in a few months, but she would just sit on the bench or sit beside me and just watch, and it's so cute. Now, though, she's got to, I'm listening to my podcast. Not my podcast. Let's be clear about that. I don't just listen to myself.
Ego just goes like this.
Yeah, seriously. Right in the morning, just got to pump the ego up. No, I'm listening to other people, of course. And she comes down and she wants to listen to, stories, and wants to listen to her kids' music. So honestly, for the last 3 months, Adam, I've been working out to children's music and stories, and so
oh no,
yeah, but makes her day, and that's probably what matters most, right? So yeah.
I remember my kids, I used to get up really early in the morning and go train, and so by early in the morning, I'd be in the gym by 6, quarter after 6, train until quarter after 7, get in the house, shower, get out the door for work. But my kids were not out of bed until 7. But then they started knowing that I was getting up and going to go train. So sure enough, my middle daughter, she comes down and she started hanging out with me in the garage. And my wife, who was still in bed, didn't know until one day she comes in with the bright Gatorade around her lips. And Mom's like, "Where were you?" "In the garage with Daddy." You just blew our cover, daughter.
Yeah, seriously. Yeah, for sure. Well, you shouldn't have given her a Gatorade, man.
Right?
Yeah.
Look, man, I needed something. It was early morning.
Yeah.
I wasn't going to eat and then lift.
Yeah, fair
That's
enough.
not a good combination.
No, that's for sure. My friend, it's been, I'm so glad that we got to connect. I'm so glad we got to do this. Come back anytime. I'd love to continue talking to you. It's actually, in some ways, it's more fun to just record our conversation rather than even have a separate conversation outside of this. For the listeners out there, Adam and I were just talking just before this. I was like, stop. We just got to start recording because this is so great. I just want to capture this. So, but thank you so much for taking time. I know it's you're 2 hours ahead, and so it's a weird time to be recording this on a Friday night. You probably have better things to do, but I appreciate. Let's be real. But
I got 3 kids in bed and a wife on the couch. It's not that much excitement.
Okay, well, I nevertheless I appreciate it. It's been fun connecting, and I hope we do it again sometime soon.
Absolutely, just ask and I'll be here, bud.
Thanks, man. Okay, well, I'm going to put Adam's information in the show notes, and you can learn a little bit more about him. And again, subscribe, leave any comments about the episode today. Would love to hear back. And thanks for joining us. That's a wrap, guys. Thanks, Adam.
Thank you.
Bye.